Welcome to the NDIS Property Australia podcast. Before starting this episode, we need to provide a general disclaimer. Information contained in this podcast is general in nature only. It does not take into account the objectives, financial situation, or needs of any particular person. You need to consider your financial situation and needs before making any decisions based on the information in this podcast. And you should consider seeking independent and professional advice for your personal circumstances. All right, let's begin.
Hi guys, my name's Matthew. I'm here with Minh from the office. Today we're talking about a few topics which have come up in the news, such as interest rates, inflation, our new properties that we will be offering in Beveridge in Melbourne, as well as the stats around the area in Melbourne. And obviously, what all these topics mean to you as an investor investing in an SDA property. So, hi, Minh. How's it going today?
Okay, Matt. How are you?
Very good. Very good.
So, in the news, I'm sure everyone's been listening to the news and been hearing all the stuff about the election and then interest rates going up with the RBA and then inflation as well. I guess it's important for investors and our listeners to understand the impact of those topics. Those three topics, I guess, on the SDA market, NDIS market specifically, yeah. Interest rates, 0.25% going up, hey?
Yep. So how does, in terms of, is that a big amount for people who might not know out there? Is that a big amount over the last period, or is that significant?
It's the first interest rate rise in 11 years. So it was 0.1% with the RBA rate. Now it's gone up by 0.25%. For an average $500,000 mortgage, that's about $68 a month in extra repayments. But that's not the killer. The killer is the interest rates that are intended to go up the next few months towards Christmas. So some economists have said maybe potentially an interest rate rise every month between now and Christmas.
Wow. Yep. That's significant.
And interest rates being as up high as another 2.0% by mid of next year, 23.
Right. Yep.
Now, if that were the case, an extra 2% interest rate hike, cumulative from all the rate increases from the banks, we're looking at an extra $1,000 a month in interest payments for an average $1.2 million mortgage in Sydney. Okay. And why I raised that number, $1,000 interest rate payments extra on a $1.2 million loan in Sydney, is because most of the SDA packages being purchased at the moment around Australia are around the $850,000 to $950,000.
Yeah, I'd say that. Yep.
Yeah. I mean, Matt, you've seen the prices around the place.
Yeah, so the range would probably be, I guess, probably low 700s to high 900s.
Yeah.
Most SDA properties.
Yep. So that kind of interest rate rise just for the next 12 months will have a negative $1,000 hit on the cash flow of your SDA investment income, obviously, which is relevant towards every investor's questions of, well, how will it be? How will my net income be affected overall? So which brings me to my next point, and that is, getting the right home loan rate for your SDA purchase is important, particularly the facility with the interest rate costs. I mean, I've seen some investors come in with 2.9s to 3.2s to 3.5% interest rate variable rates for their NDIS home loan for their purchase. And that 2%. When you add 2% to that number, so 3.3% for an average, as example, plus 2%, we're now looking at 5.3% now.
Yeah, that's huge. Yeah,
as an interest cost on the loan facility.
So, in terms of, does inflation play a role into that? How does that work?
Not many people realise this, but the SDA income calculation within the SDA program of the NDIS has a inflation trigger in there. So recently there was about 2 weeks ago, inflation update in the news of 5.1% for the year.
Right. Yep.
So 5.1% means there'll be a reflective equivalent increase of income, SDA income, in your investment. So if you were getting $100,000 gross income for the year for your investment with your SDA property, it now becomes $105,000 for the update with the NDIA.
Yep.
So with the way things are going at the moment around the world and Australia, the goal was always 2-3% the last 20, 30 years. Now we're looking at 4 or 5% now. So if the inflation is looking at 4 or 5% per year, then in a positive manner, you're looking at an extra 4 or 5% increase in your SDA income per year. Okay, so over a 2, 3, 4 year period, that's almost 20% income increase.
Right.
That's massive. That's massive numbers.
Yes. Yep.
So 100 grand gross now becomes 120 grand gross.
Yep.
In 4 years' time, 150 grand gross now becomes 180 grand. 20% more.
Yep.
Gross in 4 years' time. So inflation, although a negative weapon in the economic sense, is also a positive weapon in terms of calculations for future cash flow in your investment as well.
Yes. Yep.
So they're the two, I guess, impacts of inflation and interest rates that people should be aware of with regards to their venture into the SDA market.
And is there anything an investor can kind of do to mitigate the effects of this, or
interest
control it, or
only interest rates? If you get a good deal, a really good deal for your SDA home loan, and I've seen numbers as low as 2.8%, 2.7%, which is pretty good, And I've seen other people come in with 3.5 to 4% interest rate costs. So different lenders at different rates, and it comes back to risk of the borrower. Yeah.
So I suppose it's a situation of interest versus inflation in terms of what you can achieve through a loan, and ultimately that will impact positively if you
exactly
go for a lot of
and the last point I want to raise very quickly is the government election. Labor versus Liberal. So people are asking, well, what happens if Labor wins and whatnot? Well, under Julia Gillard, Labor brought in the NDIS. So if Albanese wins, then they're going to reinforce the commitment to the NDIS, which is currently $40 billion a year. And I want to add, one of the SIL providers I met at the Brisbane Disability Expo only last weekend said to me, it costs 1/3. So 1/3 of the $40 billion a year is spent managing the NDIS.
Right. Interesting.
It's a massive cost, right there. So so the government, Liberal and Labor, are still keen to make sure that it's delivered in a proper manner, an effective manner, and I think we'll be okay with that. There shouldn't be any concerns from any investors about the change of government if it happens. Yeah.
Yep. Exactly. Yep. So moving on, we've got some exciting news. We're kind of moving more aggressively into Melbourne, I suppose.
Yeah.
And exploring different options. We've got some developments which are coming up in Beveridge.
So as our listeners have been aware, the last 2 or 3 months we've been talking a lot about the Melbourne market, how hard it is to get land and builders and whatnot. We've come across one good builder actually, in Melbourne, and they've just come back to us the last few days with 2 resale blocks of land in Beveridge. And if you don't know where Beveridge is, it's north of Melbourne, near Craigieburn. Craigierburn's a big industrial area, commercial industrial area, and Beveridge is next door to it. So we got two blocks of land titled at 480 and 500 square meters each. And these will be 4-bed, 2-bath, 2 car HPS homes.
And when will they be ready?
The land's ready. They're titled now in this estate. So they're titled now, ready to go as resale blocks. And as soon as the purchaser buys the blocks off the vendor, then we'll go straight to council lodgements for the building approval. So it'll be about 10 or 11 months to build the house, yeah.
Excellent. And is this a normal style investment, or is it as SMSF investment, or how will that work for a...
At the moment, we have another third-party company who's bought these 2 blocks of land to do it as a SMSF sale. But let's go back to normal. So these are about a little bit over $900,000 each, $906,000 for sale for these 2 blocks side by side. And why we like these 2 packages are they're side by side. It's good. It's great for the SIL provider to manage both houses at the same time.
Yep, absolutely.
Having staff across both houses as well to look after all the participants there. It's titled, another positive there, and this is a strong growth area in terms of residential growth with population.
Perfect.
Yeah. The cost for this being $905,000 will require an investor to put down an EOI deposit of $2,000. They'll also need to pay a 10% deposit for the land contract.
Yep. Is it
Which is
5% for the build as well?
Yeah, correct. Yeah. So in Melbourne, it's quite normal for vendors to ask for a 10% deposit for land.
Yep.
To show commitment. So 10% here is about $43,500 for the land deposit there. And then $2,000 for the EOI with the builder. And then there's also a certification fee, a SDA certification fee of $5,500 as well. Right. This is all paid before or at contract signing for the land.
Yep.
And then because the land's titled, it'll be expected to settle within 30 days after that. So in that 30 days, the investor should get their finance ready and so forth. And once that the block is settled between purchaser and vendor, then there'll need to be a 5% build deposit payable to the builder to do all the lodgements with council. Yeah. So you need about at least, just for the purpose of these contracts, about 75k or so.
75k. Yep.
But as we keep on talking about in all our previous episodes, an investor should have how much percentage?
About 30%, 33%.
Or for the lender, it's at least 20%. Yes.
Yes. Yeah. For the lender. Yep.
Is the ideal number. So 20% on $900,000, about $180,000.
Yep.
Right. So most of the lenders would need that $180,000 deposit for an 80% LVR to avoid LMI.
Yep.
But the thing with this as a resale block is, again, this is quite common as well in the Melbourne market. There is no finance clause here, Matt.
Okay. Oh, that's worth knowing. Yeah.
So when a person buys a block of land, they would sign a contract subject to finance. In this case, the vendor doesn't want a finance clause, which means they can't get out. So when you're going in, you're locked in. So we're seeing a lot more of these scenarios where sellers or land developers, they want to ensure that the client is committed and serious. They've done their finance homework. Okay, they don't want to waste their time with contracts and then it cancels after 5-6 weeks because they didn't get financed properly. So it's very important for investors to know that in a hot market like this, no finance clauses are quite common.
And you need to have your finance ready ahead of time.
Yeah. Yep. And we keep on reminding our investors, Matt, don't think just because you go to a bank, CBA, Westpac, or ANZ, with their pre-approval,
that's going to go across into...
Will that work?
Whatever. No, it won't.
No. Because those banks do not do NDIS lending. Okay? You need to speak to a broker to refer you to work with a non-bank lender who does NDIS for SDA property. Okay? So back to these Beveridge blocks, Matt. I mean, we just did some rough calculations this morning. So Beveridge is near Craigieburn, Wallen, Whittlesea, Clarkfield, Donnybrook, Woodstock, those little suburbs around the area there. And we did some calculations there on the demand map on the website. Yep. The NDIS demand map shows that there's about $75 to $100 million of SIL funding every year in the area.
Okay. Yep.
And from that, we're looking at about a forecast of 2,000 to 2,600 participants in the area, right, by 2023. So let's assume 2,500 as a rough number for my calculations here, right? Number one category is autism, at 540 to 800 participants. Two is developmental delay of 270 to 590 participants. Intellectual disability and Down syndrome, 350 to 540. Mental illness and associated disability is 130 to 250 participants. Neurological disorders is 157 to 239 participants. Vision, hearing, speech and other impairments is 150 to 210. all our disabilities is 115 to 200. But more importantly, the important one here is the disability caused by injury. So they're the wheelchair participants, fully accessible, high physical support participants, right?
Right.
So there's about 55 to 110 in there. Okay.
So there's a lot of demand, you're saying, in the area.
Well, it's not a lot, but it's good demand.
Yes.
You know, 2,000 to 2,700 participants in the area of these suburbs is total SIL participants, right?
Right. Yep.
Now, as we said in the past, Australia-wide in the NDIS forecast at 6% is the average SDA participants. However, in Victoria, Victoria is the highest number, and that's 4.3%. So let's use 4.3%. So 4.3% of that 2,500 pool of people, participants, is 107 participants. Now, across the board and around Australia, participant averages are about 70% for improvability, 10% robust, 10% fully accessible, and 10% higher physical support. So 20% of the pool sample there.
Right.
So if we have 20% of 107 participants, which is based upon the 4.3% average in the 2,500 pool of people here, we're looking at about 21, 22 participants in this area of Beveridge and surrounding suburbs as HPS and fully accessible potential.
Yep.
Okay. So this is us showing our listeners how the demand map, the stats and data, and the research goes behind the locations in the property. So these two properties here in Beveridge are 4-bed, 2-bath, 2-car, right? Which is basically a carer, OOA, and 3 participants as HPS. Okay.
And that's pretty standard for Melbourne, isn't it?
Yeah, it is. In Queensland, more bigger blocks, we're doing 4-bed, 4-bath, 2-car, or 3-bed, 3-bath, 2-car. Melbourne is very hard to find land, and the providers are okay with a 422 design. Okay,
Yeah. It's smaller blocks as well.
Yes, exactly. Yeah. So 480 square meters, 16 meter wide frontage, or 14 meter, 16 meter wide frontage, I think. So based on the average stats in the area of Beveridge and Craigieburn and Wallen and Whittlesea and Donnybrook here, 21 wheelchair participants in the area out of the 2,500 people.
Right.
Okay.
Yep.
So we're looking at 2 potential houses here. So that's 3 and 3. We're looking at 6 rooms. That's for HPS or FA in these 2 houses side by side. Okay. So this is how investors should look into data to help them assess whether and talking to local providers in the area. You know.
Yep.
To find out whether they have participants who are in need of robust or HPS or FA category design homes. Okay. So that's very important there because, we also have the demand map from Melbourne from last year, and the strong areas are definitely Geelong, Monash, Banyule, Maroondah, Mornington Peninsula, Wallen, Whittlesea. So here, Wallen, Whittlesea has 189 total participants with SDA need, 189, right? Whereas my number here that I was talking about 10 minutes ago.
Yep.
Said, 2,500 times 20.
Yeah.
But that 20% was HPS and FA. So truth be told, 4.3%. So my number I quoted before was really conservative.
Yes.
4.3% on 107 participants in all those 5 suburbs, right? Whereas Donna in our office, she did some research on Whittlesea, Wallen alone, right? And that shows 189 participants in need of SDA. 163 are currently in a SDA dwelling, and those would be those group homes and legacy homes, which are all being defunded, by the way. Okay, 13 people in these Wallen, Whittlesea areas are looking for alternative SDA. 13 are not currently in SDA but seeking a dwelling, and across the board here we're looking at 6 in improvability, 5 high physical support, 6 robust, and 6 fully accessible. So again, these numbers are not set because they're a year ago.
Yes.
Right.
Yep,
and since then there've been more builds and whatnot. So the point being is there is Whittlesea Wallen is a 1, 2, 3, 4, 5, 6, 7 top 7 area in Melbourne.
Excellent.
So Beveridge, which is next door to Whittlesea and Wallen, which is these areas here. the Beveridge packages here are in a top 7 region of Melbourne.
Excellent.
For SDA.
Excellent.
So which again also confirms what we said. Is it a good area? Yes, it is. It's a high growth area. Is it a demanding area? We're looking at 2 different statistics on the demand map and the research here, right? And then if any of our clients or investors want to do a research report from another provider we use, then it'll cost $300 plus GST.
Yep.
So a third layer of research as well.
Yes.
Okay. So
there's just to summarise, if someone's trying to find out more information, do their own research, they should go on the NDIS demand data map. Furthermore, they should maybe talk to some providers in the area, ascertain the demand or the amount of participants which are currently looking for properties to move into. And then thirdly, they can also independently get a data report done on the area to determine the exact numbers of participants.
Yeah, and back to this design house here, Matt. Even though it's a 4-bedroom house, Kera plus 3, we always say to our investors, just assume 2 participants,
Yep.
1 fully accessible, 1 HBS, out of the 3 rooms and 1 spare room. Never ever assume you are getting 3 HPS people in there at 160, 150 grand a year.
That's what I try to tell my clients. Yep.
Even though they want to hear that, you got to tell them, whatever you think you'll get, hoping to get, just halve it by 50%. And if you're okay with that, as a conservative estimate, then that should be
that's very good.
Your basis to go into this. Don't go in thinking you're going to make massive returns in SDA, because no one knows the future, right?
Yep.
And there could be a whole bunch of other houses being built in the area, and you don't know about this. So in summary, Matt, what's the summary here? Yeah.
So I suppose the summary is just be aware that inflation's obviously going up. Not much you can do to control that. I suppose it's good news in terms of your earnings in the property market. Just being aware that obviously interest rates will affect your loan, and the best thing you can do is try to secure a loan which obviously gives you favourable interest rates. And also, obviously, we've just kind of gone over some of the data relating to Melbourne and high growth areas in Melbourne, as well as our developments, which we're working on, which are, obviously riding on the coattails of that high growth.
One thing we've got to mention, Matt, is the SMSF topic on these Beveridge packages.
Yeah.
So even though we quoted 905 as purchase price,
it's a 1-part contract, is that right?
As a 2-part contract.
2-part contract, yep.
If a client who's an SMSF investor wants to look at something like these packages, right, or equivalent, you're looking at $979,000, $80,000 as a purchase price.
So how much more would that be from?
Well, as per our previous episodes about SMSFs, how it all works. Again, we're not financial advisors. We're just talking about how it actually the numbers works out to be for investors to do it with their accountant and third-party lender and third-party service that does the one-part contract. This 905 as a normal purchase would be, as a SMSF, probably $980,000.
Right. Okay.
An extra 75 grand more.
Yep.
And that covers the stamp duty the interest rate costs during the construction period, the holding costs of the loan, solicitor fees, all those other costs, application fees in there. Because in this scenario here, the SMSF would just pay a 20% or 25% deposit, and that's it, one-off payment, and the rest.
Yep.
And then pay nothing else.
Yep.
When it's all completed in a year's time, then they'll be transferred over as one asset. Yeah.
Excellent.
So that's the SMSF number there. So that's what we've got to. I'll bring that up now because we've got to talk about it. That's all. Yeah.
Excellent. I think that's all we wanted to kind of cover today.
If anyone wants to send us a message, Luba from our office, she said to us to remind you and I to tell our listeners to contact us on Instagram or Facebook.
Yep.
Or on our website if they have any questions or have any topics they want us to talk about and cover. We'd love to hear from our listeners, and we'll help out as much as we can. We just had the Brisbane Disability Connection Expo only a week ago. I'm flying down to Melbourne this week or tomorrow to catch up with some some clients and some builders in Melbourne about the progress of stock and opportunities in Melbourne. Also attending the Melbourne Property Expo in Melbourne as well for 2 days. And then in 2 more weeks, we're going to go up to the Townsville Disability Expo.
Yep.
On the 19th of May. Yeah. So now that the COVID's been lifted pretty much everywhere, it was amazing to see all the great show-up rate of all the providers in Brisbane. It was a massive.
Because the Brisbane Expo hasn't been on for about 2 years.
Yeah, correct. And everyone all turned up this time around. It was good to see the crowds were there and the exhibitors. It was really good to see. It was big, massive numbers. Yeah. Excellent. And we're very excited to be part of this all, and we're going to keep on doing a lot more podcasts in the coming few weeks of other special guest speakers, charities and other groups to promote their brand awareness to the public. And we're very excited to all that. Yeah, but yeah, Matt, over to you.
Excellent. Well, thanks, Minh, for taking the moment today to just talk about these issues which have been in the news, and looking forward to joining you on the next podcast.
Awesome. Thank you. Bye-bye.
Thanks.
We hope you enjoyed this episode. Please make sure that you are subscribed and following us so that you can keep in the loop with all of our upcoming episodes. We would really appreciate it if you could leave us a 5-star rating, a written review, and to share this episode with those that can benefit. Until next time, catch you on the next episode.